The biggest initial public offering in the history of Indian capital markets is finally happening. Reports indicate that the National Stock Exchange, the NSE, is likely filing its DRHP this week, eyeing a massive 2026 market debut at a jaw-dropping valuation of 4 to 6 lakh crore rupees. But while the market celebrates the NSE entry, smart investors are asking a completely different question. What happens to BSE India, and is it a screaming buy at its current price of over 4,126 rupees? Let's break down the hidden correlation that could supercharge or stall your portfolio. First, let's understand why NSE's IPO matters to BSE shareholders. In corporate finance, there is a concept called peer group re-rating. For years, BSE was the only listed game in town for public exchange equity, carrying a premium valuation because of its uniqueness. When NSE lists, global mega funds will have a massive benchmark to compare both players. If NSE lists at a massive valuation premium, which it likely will due to its dominant market share, it creates a structural floor for BSE's valuation. Historically, when a massive sector leader lists, it brings intense institutional liquidity to the entire sector, often driving up the stock prices of existing listed peers. But is BSE fundamentally strong enough to hold its ground? The short answer is yes. BSE's turnaround story over the last 2 years has been legendary. They successfully broke NSE's monopoly in the high-margin derivatives segment with the Sensex and BankX weekly options. Looking at their latest quarterly numbers, their revenue grew to over 1,640 crores rupees, and they maintain an operating profit margin of 67%. This is an absolute cash cow of a business model. However, before you go all in on BSE today, you must face the elephant in the room: valuation. Trading at a PE of 66, BSE is priced for absolute perfection. Every ounce of its recent market share gain is already factored into this price. When NSE lists, the battle for options volume will get even tighter. So what is the strategy? If you are a long-term investor, BSE is an exceptional business to own as India's retail participation scales. But buying at the absolute peak of a new cycle is rarely the optimal move. The smartest play right now: hold your cash. Watch how the NSE DRHP prices its shares and use any short-term market corrections or dips toward the 50-day moving average to systematically accumulate BSE shares. Are you planning to buy BSE now, or will you save your capital to bid for the mega NSE IPO? Let me know in the comments below, and don't forget to like and subscribe for more institutional market insights.